Good morning, everybody, and this is your S&P 500 day trade setups for today. So, looking at the 8 hour, we do have a crossover. We are still below the 155, and we are in a range. So, been in a range for a week and a half now. Nothing has changed yet, and that is not a situation that I like trading. So, for me, this is something that you sit and watch. So, there's a couple of things on the cards here. So, the first thing is, we had this trend line here form, and you can see we kept coming back to test it, so we've tested it twice. Now, we've also got this trend line forming. So you can see that's 1, 2, 3, 4 attempts at that. If I draw a line along the bottom here, I start getting a flat bottom triangle. Could still be a flag as well. Could still very much be a flag. This little square here could be a break below the triangle that was forming. So for me, this is consolidating, it is ranging, it is not something that I want to be trading. And you can see yesterday as well, we dropped below all the moving averages, got a moving average crossover, came back to try and reject it, that failed, and we continued up. And if you look at the oscillators, they're just ranging with price. So at the moment, this is a clear sit on hand scenario for me. I'm not even going to try and pick bottoms and tops at the moment. It's not worth it. Any kind of break above the top levels will get me long. Any kind of break below the bottom levels will get me short, and that's the long and short of it, I suppose. What we could actually do is just bring that level in there. So if you look to the left, you can see there's a lot of structure here. So that would be my line in the sand at the moment. So that is 41.67. That would break diagonal and horizontal trend line. And then I'd be paying attention to 4,200 to see if we can get through that. I would expect us to bounce off that. So you're probably looking at you probably get something like a 200-point stop loss to a 330-point target. But that would definitely be a line in the sand. So 4,200 needs to give way, and we need to close above it on the daily for the bulls to start getting any confidence that they may have this thing back under control. So I think for me, I'm just sitting quietly and waiting for the institutions to decide which way they're going to take this market, and then we will get on for the ride, whether it's up or down. But at the moment, nobody knows what they want to do. They are sideways, they're ranging. And I think the last thing on the daily, look at all this chaos on the daily. So here you can see the range a lot clearer. So above 4,200, you've got trend line break, you've got a lot going on, and then below here, you've just got to pull back to test, if I come to the weekly actual fact, to test a big head and shoulders. So that's kind of the scenario that I've got at the moment. I don't have any other opinions on this at the moment, except that it is completely confused. And this kind of price action is conducive to losing money, so especially us retail traders, because a few of us get it right, but more of us get it wrong than right. So danger range, I think, is what you should refer to this to, and just stay away from it. Wait until we get a trend and then jump on the trend. It's far easier making money when you're in a trend than when you're going nowhere. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Maybe we have a change in price action by then. Cheers for now.